I do have Mr. Sumit Mazumdar from CII and Mr. Neotia from FICCI. Thanks very much, gentlemen, for being with us. You did have your date with Finance Minister Jaitley earlier today, making key recommendations for what is perhaps the big budget exercise out in the last week of February. But Mr. Mazumdar, let me begin with you. What are your expectations from Budget 2016?
Okay, before I tell you my expectations, I'd say I came away very positive and satisfied with the meeting. I found the finance minister in a very amenable mood. He was listening. He was, I thought the meeting went off extremely well. There was positivity in the room. He had his entire secretaries, joint secretaries, directors, everybody over there, and a lot of very good points were made. So it really left a very positive impact in my mind, which also gives me the hope that we should see a good budget this year, depending on how much he incorporates. As far as CII is concerned, one of the things we talked about is we totally support his stance to reduce taxes to 25%, except in our view, currently the taxes being paid by some companies is in the range of 23.5%. So we have proposed that the reduction should be to 22%. As far as removal of approvals and incentives, we are in support of that. We totally agree, but we requested that the two happen together. They happen in tandem, they happen hand in hand. That is the reduction of the rate and also removal of the allowances. We also mentioned that the relevance of MAT will be lost once the approvals and incentives are removed, and that MAT should also be, we should see the end of MAT again in a calibrated fashion, all three working together. That was one of the things that we talked about. The other thing we talked about was the creation, the creation of demand.
Mr. Mazumdar, just hold your thoughts there, because let's get in Mr. Neotia also into this discussion. I'm going to go step by step by some of the recommendations made by both FICCI and CII, and I have copies of what you people have recommended. Let's get into the specifics. And Mr. Neotia, the industry at large, both FICCI and CII are appreciative of the fact that the government is giving public sector push as far as investment is concerned. It was supposed to create an enabling environment that would have crowded in private investment. That was the idea of Budget 2015. That hasn't really happened. So A, what do you attribute this to? And B, are you all right with the government spending a little more, even at the cost of perhaps expanding the fiscal deficit? Mr. Neotia.
We have recommended that the government should not relent on its public investment program. I think it's very important. The country needs infrastructure. As much as we need ease of doing business, we also need to reduce the cost of doing business. And one of the important components of this lowering of cost is to see that the infrastructure is in place. We do believe that the fiscal consolidation and roadmap is very important, but the government had laid out a 3-year plan to bring down the fiscal deficit target to 3% of the GDP. We feel that if this needs to be finally calibrated maybe to 4 years to bring it down to 3%, that may be permitted in the given circumstances, looking at the fact that investment is much needed in infrastructure.
All right, so that's the view coming in from FICCI, that if at all the need arises, we should let the fiscal deficit expand, even at the cost of course, of producing infrastructure. But Mr. Mazumdar, let me come to you. There are hawks and there are commentators out there who believe that the fiscal deficit should be met at every cost. Fiscal consolidation should be key, because ratings agencies see that very keenly. What's your view on this? Because from the CII's angle, one of the things that you've recommended to bridge the fiscal deficit is divestment, and we both know that the divestment process hasn't really taken off. Market conditions haven't been very conducive.
It's true that divestment hasn't taken off, and that is an alternative for the government to carry on its expenditure and perhaps even increase its expenditure. But I do believe that the divestment, if properly tackled, can happen, and I recommended that we should go in for divestment, but we should do it in a phased manner. We should do it throughout the year, so that the benefit is there on the investment side of it throughout the year. So that is still, we recommend that divestment is one of the keys in keeping the fiscal deficit. But I would tend to agree with Harsha also. Instead of 3 years, if it goes to 4 years, I do believe the economy can live with it, because growth is very essential.
Mr. Neotia, I have two questions coming from the answers that Mr. Mazumdar has given. Growth is essential, and if the need arises, like you rightly pointed out, let fiscal deficit expand. My question to you is, we were supposed to see the positive impact of higher public sector expenditure, which was supposed to crowd in the private investment. We're not seeing things on the ground. The latest CMIE data for the quarter of December has been very dismal, both as project commissioning and as investments are concerned. What are you now attributing very low private investment to?
See, first of all, private investment, from the day you take the decision before you start actually seeing the investment on the ground, is quite a time lag, because you have approvals, you have to finalize the plans, you have to get your financial closure and the rest of it. I think the fact that there was a slowing down of the economy and it's only started picking up over the last 1 year, most of the private sector is now in the planning stage for investment, and I think 2016 should see some of the early investments happening. I do feel that we will move towards an 8% growth at least in the next 1 year or so, and that should bring back private investment. One of the reasons why private investment couldn't come in is because in the expectation of a higher growth, everyone had invested in capacities. And obviously, because the growths didn't happen, the capacities remained unutilized. So on one hand, you have unutilized capacity, you have obviously a stretched balance sheet, you're not throwing up enough cash, you have a challenge on your balance sheet. But my sense is that in the last 1.5 years, and perhaps in the next 1 year, this stress would be greatly reduced in many sectors, and that's obviously there will be some sectors, perhaps in infrastructure and steel, etc., where it might be a little longer. But in many other sectors, I do believe that the stress would gradually ease. If there is also a simultaneous reduction in interest rate, it will help in easing this stress faster, and we do hope that after that investment will happen. We must remember that India is one of the most attractive markets relative to any part of the world. So I have no doubt that private investment, both Indian and international, will happen starting 2016.
And we are keeping our fingers crossed for that virtuous cycle of investment to kick off. But Mr. Mazumdar, I'm going to shift focus to the other big thing that both the CI and FICCI have spoken to the finance minister about, and that is the stressed rural economy and also the low demand, the domestic demand that has suffered. What is your recommendation and what is your expectation from the budget on that front? Would you expect some kind of a stimulus both for the rural economy and, of course, for stimulating domestic demand in India, something that our markets were very attractive about, but something that has been dented in the past few odd quarters?
You know, I totally agree, because the rural economy, needs attention. And without a doubt, the rural economy is the majority of India, really. So we'd like to see investments in the rural economy, whether it's in terms of modernization of agriculture, whether it's in terms of irrigation, whether it's in terms of mechanization or whatever, so that the economy, when the rural economy gets a boost, there is a demand creation down the line. And absolutely, the government needs to look at spending in rural economy and addressing that issue.
All right, Mr. Neotia, you want to come in on that? The domestic demand, what is your expectation from budget 2016? What should the budget be focusing on as far as stimulating domestic demand both in urban and rural India is concerned?
Well, I fully agree with Sumit. I think broadly it's about creating the necessary infrastructure, and I know this is not a one-year process, because if you have to look at reducing dependence on monsoons and you have to look at mechanization, etc., these are long-term measures, but the government can certainly start taking steps in that direction. Maybe the fruits will take a few years to really be reaped. Until then, we have to hope and pray that we have good monsoons.
All right, let's hope and pray we have good monsoons and the rain gods come down nicely on us. But let's shift focus and talk to you about the other big thing, and that's of course tax that Mr. Sumit Mazumdar really began talking about. Mr. Mazumdar, let's now turn focus and talk about taxes. You were obviously of the view that corporate tax should go down not to 25% as the finance minister has spoken about in his previous budget, but to 22% now. You also, but the question really is, while corporate India wants taxes to go down to 22%, and that's one of the recommendations that you've made to the finance minister, corporate India doesn't seem to be too happy with exemptions that are being withdrawn, because there are many sub-points that have been made on that front.
No, you know, as far as the 22% is concerned, I'd like to add over here, you know, when we say 22%, we mean absolutely 22%. There should be no further add-ons or cess or anything on that. I just wanted to clarify that. As far as removal of exemptions is concerned, CII is in total support of removal of exemptions. We are only being cautious that the removal of exemptions are in line with the reduction of taxes, so that there's no mismatch. But as far as CII is concerned, we totally acknowledge and accept that if the taxes are to come down, these allowances will have to go.
All right, these allowances will have to go, and if taxes have to come down to levels of 22%, and like he's rightly pointing out, without the cess and all of that. Mr. Neotia, you want to come in on that? Because one of the recommendations that the industry has made for a long time, but the government hasn't found favor with, is abolition of MAT. Of course, it was widely speculated last time around that MAT will go away to promote Make in India, but that hasn't really happened. Is that one of the things on top of your budget wish list?
Yes, well, it's certainly a suggestion. We believe that the MAT was introduced essentially to see that those companies that were getting tax exemptions were at least paying some minimum alternative tax. Now, once the exemptions go, perhaps the logic of MAT also gets diluted. And even if it is not completely abolished, I think there is certainly a case for its a significant reduction. And it should happen in tandem with as you withdraw the exemptions.
All right, it should talk about the exemption. Very quickly before we wrap this up, I want to speak to both of you about the recommendations that have been made on the pay commission payouts and of course on the subsidy outgo. You know, it's all very well to say that the subsidy should be limited, it should be trimmed, but this is a political economy that Mr. Jaitley will have to deal with, and despite oil prices being low, let's talk about the tough question. Do you believe, Mr. Mazumdar, this is coming your way, that the government has been able to leverage low crude oil prices as well as you would have liked it to? I know your recommendations have been made on subsidy outgo, but first of all, do you believe the government has been able to use the benign oil regime?
To an extent, but the government should have really, you know, taken greater advantage of it. And this was really the time and opportunity to remove the subsidies. And I still look forward that the subsidies are removed. There, you know, even in fertilizers, there's direct transfer to the farmer. This whole mechanism has to be overhauled so that, you know, the subsidies, whatever has to be given, is beneficial, but not necessarily just because it's done for political reasons. It should really make economic sense. You also mentioned about the pay commission. The pay commission outgo is going to be huge as far as the states are concerned, and this is a major concern. Although there would be some sort of a demand kick in with the pay commission, but I don't think that would be sustainable, and that would be made primarily on consumer goods. So we have recommended that if at all possible, whether the pay commission payment can be paid out in stages so that the states are better prepared to handle this huge outgo of expenditure.
Before I close this, I have to talk about the elephant in the room, and that continues to be the GST. Both industry lobbies, the FICCI and the CII, have said that they're solidly behind the government as it tries to push the GST through. What's your expectation? Will we see the GST go through the budget session of Parliament? What are you picking up from corridors of power, Mr. Neotia?
Well, we certainly hope and we do expect that it will happen sooner than later. We believe that it is a game-changing tax reform in our country. It will unify our markets. It will ease a lot of problems that industry and for that matter even ordinary citizens face. It more than anything else will increase compliance and therefore widen the tax net and bring a lot of unaccounted transactions into the net. So I think overall, from a government point of view, regulatory point of view, compliance point of view, and ease of doing business point of view, it's a very important legislation. I do believe that some of the small issues that are in the way would get resolved in an amicable manner. Of course, politics is not something that we can prejudge, and we will just have to see how it plays out. But we certainly hope that ultimately everyone will see the merit of the legislation and let it happen.
So we can't prejudge politics, and which is why I have a tough question coming your way, Mr. Mazumdar, and this is my final question to both of you. Is India Inc. willing to and prepared to live without the GST if politicians can't find common ground on this?
No, I would say that India Inc. would expect politicians to find common ground. The politicians should talk to each other and do whatever it takes. We as a chamber, CII, is constantly talking to the opposition. We are convinced that GST is good for the country, is going to make India one country, and it has to happen, and we shouldn't relent on our efforts.
Mr. Mazumdar and Mr. Neotia, we really appreciate you taking time out this evening and speaking to us exclusively and first on ET Now on your big meeting with Finance Minister Jaitley as he gears up to present his second full-year budget. Thanks very much for being with us.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.